Our sponsor for this session is Netherland, Sewell & Associates, Incorporated, worldwide petroleum consultants. Reputation, expertise, service. Please visit their page in our Sponsor Showcase tab.
Next, we welcome Chris Kalnin, CEO of BKV Corporation. Chris has largely been involved in the Marcellus Shale until last year when BKV purchased Barnett Shale assets in Texas from Devon Energy. Chris will speak about the company's strategic path and the deal he closed despite the pandemic. Hello, Chris.
Hello, everyone. I am Chris Kalnin, as Darren mentioned, CEO of BKV Corporation. Very pleased to see you, whether it's morning or evening. I hope that you're staying safe and that we, as a country, get through this difficult time. So I'd like to talk a little bit about our strategy, the deal we closed, and as you all know, behind every deal, it's sort of like an iceberg. You see the tip of the iceberg in the news release, but the reality is behind that there is a lot of work and a lot of planning and a lot of strategy. And so, this presentation hopefully takes you a little bit behind the curtain, what we're doing, and gives you an insight into kind of how we see the world. So let me talk a little bit about who we are. So we're a corporation and recently converted as of May last year to a corporation from a fund. We believe in acquiring high quality producing natural gas assets, or predominantly a natural gas company. We do produce some liquids with our Barnett acquisition. We believe in visionary strategy, and I'm going to talk a little bit about our strategy and how we see strategy, because I think it's really important for our industry to really take hold of that concept of strategy driving M&A, not the other way around. We also are focused on the nuts and bolts execution. That is critical for us. Daily blocking and tackling is what makes great companies, and we believe in that. And finally, our core values are key. For us, that's based on biblical values. We have a principle here, do unto others as you'd have them do unto you, and that we live by that throughout the company and including partners in the industry. Finally, we see ourselves as a consolidator. We see the next 10, 20 years of unconventional world really being a consolidation game, and I think we're already seeing that start to play out in basins like the Permian, for example. So the key elements of our strategy are our portfolio. Obviously, like the restaurant business, which I love to use as an analogy, it's all about location, location, location. It starts with the rock, where you are. That really matters. And for us, really studying that, having a strong technical team is part of that. And then we bring this idea of technology and analytics. Technology has really advanced over the last 20 years. Things like big data, things like algorithms. We are leveraging that. We have an in-house data scientist that we employ as part of that, and then a variety of engineers that work closely with them. And then finally, I always say we like to run a business that happens to be an E&P business, but it's a business first. And so making money for our investors, yielding cash, delivering results, that's really central to our philosophy. If we can't make money, we don't have a license to operate. If we can't operate safely, we don't have a license to operate. So for us, being able to generate that free cash flow, deliver that, and give our investor options of growth or yield is really central to our philosophy. So a little bit about our company. As I said, we've got over $1 billion in assets between our NEPA, Northeast Pennsylvania, Marcellus Shale. And again, our portfolio in NEPA is tremendous. It's right between Cabot and Chesapeake in the core of the Northeast. We really like that rock. It's really been a great cash machine. The declines are relatively low, and the wells, the inventory that we have remaining is very exciting there. As well as and I'm going to talk a bit more about this, we've got the Barnett Shale, which is our most recent acquisition and really has taken us to a different level of size, as well as a multi-basin strategy. So I'll talk more about the thinking behind that. Banpu, our investor, it's a coal and power company out of Thailand, where we have some very deep relationships with their executives and a very synergistic relationship working with them. Has invested $1 billion in our business. Oaktree, who we made an announcement about in December last year, invested $100 million in preferred with us, and then has a commitment to follow on with another $600 million. So very excited about the investor base that we're starting to build. And then some of the management employees are earning equity into the company through our incentive schemes, like our long-term incentive program. With the recent close of the Barnett, we're one of the largest producers, certainly in the Barnett, but also now emerging across the U.S. So I'll talk a little bit more about that. We are committed to be very low leverage. In fact, we're almost debt free, and we probably will be debt free out of the first quarter. We have a little bit of shareholder loan, but really an all equity capital structure that gives us tremendous flexibility, whether on the hedging side, on the acquisition side, and just to manage our balance sheet in a dynamic environment. As